Will history repeat for crypto? We have the monthly close, which is right upon us. And it's a very, very important one because it's going to determine whether March is going to be bullish or bearish. Do me a favor, let me know in the comments, what do you guys think? Is March going to be bullish or bearish? How do you feel about the market? Let me know in the comments. And also, how many months of the year have 28 days in? Because there's February with 28 days. Let me know in the comments what you think. And then we will get straight into the stream. And I want to start off over here with this tweet from 𝗥𝗚𝗃𝗫. He says that March is just around the corner. Historically, BTC has broken out past its macro downtrend around 366 to 396 days before the halving. This March, it will be 396 days before the halving. So if you take a look at this over here, I think that has more significance than what the actual monthly close has, because timing-wise, you know how the halving affects the Bitcoin price and how it usually rallies up into that. And if you have a look at this, this was the 2016 rally that started to take off. That marked off 366 days, then 396, and now we are yet to break this trend line, and we're coming in around on the 1st of April is going to be 396 days, which means that sometime over the course of March, we should break that long-term downtrend, and then you would be hoping that that upside continues and a new rally begins. So do keep an eye out on that. Looking at the monthly chart with all of our relevant momentum oscillators, I have got the stochastic RSI, which we have known for quite some time, has been ticking on towards the upside. A monthly close will solidify that uptick with the shorter term above the high term, which is the blue above the orange. And then we also do have the RSI over here, the normal RSI. And all of these line up with the previous bottoms once they started to tick back up and you reclaimed above the yellow over here. Yes, this bear market has actually been a lot more brutal than the previous ones because a lot of people got trapped over here in June thinking that that was going to be the bottom. And actually, if you look at a lot of on-chain metrics and a lot of things within the market, they actually also point towards this. This should have been the bottom in June when we made that low. But then because of FTX, yes, we went down a lot further than that. MACD is also crossing towards the upside, or at least the histogram is slowing down. Here I have the vertical bars marked out, and all of those essentially, let's put it on log scale. Maybe you'll be able to see it better. All of those mark the previous bear market bottoms. So will this time be different? That is the big question. Let me know in the comments. What do you guys think? Do you think that this market is going to take off towards the upside or not? So moving on, the monthly levels that we're looking at over here from the previous cycles. So James outlines it over here. He says that after Bitcoin bear market bottoms, then we tend to see a month of drastic price appreciation, followed by a month or a period of consolidation. So we've had that drastic month of appreciation, right? That was throughout the month of January. We went straight up. So look at the previous cycle bottoms. November 2022, we bottomed. January 23, we had a 40% appreciation in price. February, we only had a 1% increase. Look at the comparison to 2018. We bottomed. February, we had an 11% increase. And then in March, we had 7%. Look at January, we bottomed. February was 18% increase. March was a negative 4% increase. So here you have it. These are the historical data points. March historically has been mostly a bad month with, what's that? 1, 2, 3, 4, 5, 6 bad months and 1, 2, 3, 4 good months. So maybe it will even out and we'll have 5 and 6. So we'll be keeping an eye out on that. But ultimately, what you want to focus on is that trends tend to continue. So with February being mostly green, will March be green? That is the burning question in everyone's mind. I think it's going to depend also heavily on what the stock market does going into their monthly closes. But the one positive sign is that you can see that compared with 2022, the daily trade volume has been consistently higher in 2023. So constantly increasing over here. And there you have the massive outlier, which was the FTX collapse, which hopefully that would mark the major capitulation within the markets with the highest volume that we've seen in a long time. Hopefully that is the turning point for the markets. But risk does remain to the downside as long as price is stuck below this key yearly level. Key yearly level on our top-down analysis key indicator chart over here has the yearly high set in at 24,258. But support is below that. you now have a cross between the 12 and the 24 exponential moving average. So this is going to act as some level of support. That also lines up with your 21 exponential moving average, which has always been important for the long-term health of Bitcoin. As long as Bitcoin holds above that and those are angled towards the upside, you would expect that it's going to react as support. And at a later stage, we'll have a chance to break all this major upside resistance and then trend on higher. So that's what I'm looking at over there. Same thing, nothing's changed over here on the weekly chart, just kind of consolidating or chop-solidating within this range, chopping out both short-term traders on the long and the short side. The leverage traders are getting cut in and out of their positions. And the best trade to do right now is, this is kind of a no-trade zone, kind of sit on your hands, maybe consider dollar cost averaging. That's the best scenario that you have right now. But the longer that we can do that and move sideways over here, the better it is actually for the bulls to eventually break out, because this is going to be an area of support. This trend line, this is the 21 exponential moving average trending up, and the higher that it can go and take or get at least above this horizontal box over here, then we can solidify that as a strong support zone. So far, what's happened within this year: January CPI was above expectation. January PPI also above expectation. January jobs above expectations. January PCE above expectations and rising. December CPI PCE has been revised higher. And then he says, yeah, imagine if February CPI shows rising inflation, it won't be pretty. So all in all, according to this account over here, the 𝗕𝗬𝗃𝗍 letter, it's all in all actually looking pretty bearish. But what does that mean? As long as the market doesn't break down, it's actually showing that the market has strength, because the market, of course, understands that all of this is going on, and consequently, it's pricing this in. As we currently speak, it's pricing in the worst and trying to send prices to the downside, but support seems to be holding, at least for now. So the longer that price can hold sideways, the better is essentially what I'm saying, because then it's shaking off all this bad news. And here we have, just 3 weeks ago, the stock market moved in a straight line higher. Now, nearly 65% of the trading days in February have ended lower. Stocks are struggling to hold a daily gain today after closing red in 5 of the last 6 sessions. This is the result of a market driven by the Fed, which is entirely true. But also, I did mention to you guys, keep an eye on the liquidity. I'm actually going to bring up a chart for you in a moment. I'll have to search for it. There is a chart that you can get from TED Talks Macro. You can use these indicators whereby you can track all of the liquidity within the market. And I think that's going to override what the Fed is doing. As long as the global liquidity is increasing, that will override what the Fed is doing. And you'll want to keep an eye for, as soon as there's an uptick in that global liquidity and it overrides the US markets. But yes, it is true. That is going to be, the markets are driven by the Fed, at least within the US. And now there's an interest rate expectation update that's taken place, where the Fed funds futures are now seeing a 25% chance of a 50 basis point rate hike in March. And remember, as each passing day goes, this number will constantly change as we lead into March. I think it's around the 22nd of March is when they are going to have the next interest rate hike. So he says this is down from a high of 36% after PCE inflation last week. However, we still see a 41% chance of rates going to 5.75 plus. That's the Fed funds rates. Most importantly, 0 rate cuts are expected in 2023, which is entirely true. You can't deny those facts. At the moment, it looks like it's extremely unlikely that they're going to cut rates at all. The best hope that the bulls have is that the rates are only increased by 25 basis points and we don't get anything higher than that. So that is something to keep an eye out on. The stock market is, of course, also similar to crypto, pricing all of this news in, but nevertheless, it is holding above that 200-day moving average, the yellow one over here. You can see the yellow moving average coming in. That is your cluster of support. If you lose that support, you're going down to the 0.25 and then to the range low. That means that Bitcoin's going back down to 20K. And if it loses that, its range low is going to be around 18K. So that is kind of what you need to be watching over here. As long as this holds, I would give bulls the benefit of the doubt. But as soon as you start to close below this mid-range over here, then you got to be looking to the downside. And I want to be clear, guys, I'm talking more high time frames. All the previous charts I've just shown you in today's show are talking to the higher time frame trader. For the lower time frame traders, yes, risk remains to the downside. You have to decide for yourself. Are you treating this as a range, or is there a possibility that a new trend is being established? If you're treating it as a range, and since markets range for 80% of the time and trend for 20% of the time, then it means you're breaking back into the range. You're coming towards the mid-range as your first target. Second target is going to be the range lows, which means you should be looking for low prices. High time frame, everything is shifting. You're looking for Bitcoin to hold sideways and slowly start moving towards the upside, gradually crawling up in the same way that we slowly started to put in a bottom right from 15.5 and grinded our way up towards 16, 16.5. Then we were at 18, and then 18 is where it suddenly took off. We could be going through a similar thing to what happened between that 16 and 18K level, which is why you want to, in my opinion, on the higher time frame, at least give the bulls the benefit of the doubt, purely because we are saved by the grace of the halving cycle, luckily in Bitcoin. But liquidity does rule all. I'll bring up the liquidity chart for you in a second. The dollar is looking at its first area of liquidity to be tagged, which is coming in at 105.6. That's near to the 0.382 fib retracement level. Your next level is going to be the 50% retracement. That is my main target, would be 107.96 for the DXY. If it gets to that, I'm looking for that area to maybe do an over-under scenario where it possibly comes up like this, and then back under, deviates, and then sets in a lower high in relation to the left-hand side over there where we set the major top. Clear above that, and then you're potentially coming all the way up to 110.9. That would create a lot of pressure for crypto, but as long as crypto can hold, so if the DXY is moving up like this all the way to those levels, and crypto at the very least can hold above its mid-range being around that 20K level, then I would say all in all, crypto is still poised to go up in the future. As long as it can move sideways like that and kind of just consolidate while the dollar's going up, I think it will hold up okay. The markets in Mayhem account over here is showing that option buyers are positioning for the VIX to move higher. You know what that means. Increasing VIX is decreasing stock market, means pressure down for crypto, at least in the short term. So there you have it. There is the VIX. Now, bringing up those liquidity charts over here. Let me just quickly find them. Load layout and liquidity. There we go. So this is what these look like. Type in 𝗕𝗬𝗕𝗬𝗏 macro indicator under your indicators over here. Let's quickly show you. Well, you're welcome, 𝗕𝗬𝗕𝗬𝗏s, if you're watching this. There you go. I'm sure a lot of people, 260, 93, 229. Let's see what that's at after the show. Add those to your charts. I think they're useful. You can track the liquidity. At the top over here, you have net US liquidity. Liquidity is tracking down. You can see as soon as it starts to turn down, price action follows suit. Then you have the People's Bank of China, their liquidity injections that kind of balance things out because you had these massive spikes of liquidity over the course of January and February. And then you have the major central banks' assets over here. So you can take a look at that. Play around with these. I think they're pretty useful. And then you have the USD stablecoin supplies, which is constantly been tracking down. You want this to be in a strong uptrend for price to follow suit, at least in a healthy fashion. So I'm keeping an eye on this. I would anticipate that at some point this is going to change. I don't think it's going to go be ridden all the way down straight to zero. So watching that over there. If you do want exposure, by the way, in the other equity markets, consider PrimeXBT. There is a sign-up bonus as well in the description below. If you do want to check them out, where is it? You get up to $7,000, but you have to type in the promo code Kyledoops or you will not get the sign-up bonus. So click the link over there. I've been using them. I see that you guys degened into the guys that I'm using. This guy has like now over $70,000 worth of equity because you've all been using him, but he's made me pretty decent profits. That's king of price action. There are a couple of other guys. I gave this guy a minimal amount, $100, because yeah, he's nuking this account already minus 16%. I've only been using him for 1 day. This guy's got 15%. In total, I'm up 10%. The total portfolio over here, let's just quickly click on that, go back. And where can I see that whole portfolio? Let's go over here. There we go. So it's up $165. Kind of, it's not, like life-changing kind of money that you're going to make, but at least it's a little bit of passive income. The way that I see it is exposure to other markets, because these guys trade like gold, commodities, because the PrimeXBT offer crypto, commodities, stock markets, pretty much a whole bunch of stuff. So if you do want that, check it out. The link is in the description below. Quickly touching on the Super Guppy indicator, everything is all and well according to this chart over here. Signal to go long once the gray flipped into green. That happened at a price point of 20,800, and you'll be holding into your positions ever since. As long as these lows over here don't get breached, then you're looking at anywhere around this region for your next higher low to form. So you have the major lows, you have your entry point, you have a higher low in relation to that, and then you have your next higher low coming in within this region over here. That also gives a chance for the 200-day moving average to slowly start curling up. This is a very important line in the sand, by the way, this 200-day moving average. You want to see this slowly start turning towards the upside. Currently, it's almost angled down. Let's just zoom in and look at that angle. Okay, it's flat. It was angled down over here. It slowly started to curl. So it lines up with what I'm saying, guys. The longer that you can hold above 20K and move sideways, the more these momentum oscillators and moving averages and EMAs, everything starts to turn back up. And then all the bots and algos are signaled to start buying. When that buying pressure kicks behind price, that creates those accumulation zones, and then things can move up. So same on this chart over here, no difference, no change. Same on this one over here. As all moving averages are holding, trend line is holding, kind of watching this area as a potential next higher low. I thought let's take a look at the Gaussian channel. We haven't looked at this for a while. This is a trend trading tool that any one of you can use at home. All you need to do is go on your indicators and type in Gaussian channel. Let me spell it for you. Gaussian channel. There you go. The Gaussian channel is that one over there. Useful tool. So far on the Bitcoin 12-hour chart, we are holding above. It's turned green, and you're kind of using this area. You can see a tap of the middle Gaussian channel over here, this band, which means that you want to see that area hold as a high low. It's not the end of the world. If it does come down, you're using that as your last line in the sand before taking out those lows over there. Then things go full bearish. So if it can hold above 22,158, bulls do still have the very, very slight edge. This is for medium time frame traders. Those of you swing trading, looking to hold your positions maybe over the next couple of multiple weeks to months, above 2 weeks to a couple of months. That's the zone that you're watching. But I thought let's look at a couple of other charts over here. Firstly, I just want to see the daily. Let's see where the daily is at. So the daily has flipped green. Price is quite extended. Top of the Gaussian channel comes in line with the bottom of the 12-hour one at 22,065. Middle comes in at 21, but that means you're going to take out that low. Okay, let's look on the 12-hour at multiple different coins and just kind of see to give us some sort of an indication of where they're at in relation to Bitcoin. Ethereum still looks good, at least on this one over here. Optimism, green. Atom. Okay, Atom has broken its support over here. So you have a change in structure. You can see this looks like distribution, right? Always look at a chart and ask yourself, does this look like accumulation or does this look like distribution? We know that Total 3 was in a strong downtrend. We've looked at that almost every day for a couple of weeks, meaning that altcoins are at risk. So distribution over here coming down, breaking below the Gaussian channel. This does have a chance of going much lower. NEAR is still holding its Gaussian channel. You don't want to see it come below the low band. Take out the low band. You're going to take out those lows. And then this is just going to look like distribution. 𝗬𝗏 is playing with fire over here, barely holding the low bands over here. If 𝗬𝗏 doesn't start to rally up soon, I would say that this is also going to look like distribution. Filecoin. Not much to say there. Massive pump. China pump. Okay. Phantom holding the low band. Don't want to see any closes below that. As soon as that happens, I would say Phantom is going to distribute. Uniswap looks okay. Same thing. Hold the low band. DOT also same thing. Hold the low band. You want to see it bounce out of that region. MATIC. I know that MATIC have something going on with the ZK Sync announcement that's coming up. I read something about that, but you know, these things are usually a buy the rumor and sell the news event. So MATIC has had an enormous run. I know from a range perspective, it's pretty much distributing off of the range high. So probably not a good one to go long on right now. Solana only just started to turn green. Same thing. I'll just say keep an eye on the lower band over there. Chainlink, same thing. Lower band, you want to see that area hold, preferably if it can bounce from here, but worst case scenario is the lower band. Dogecoin looks bad, still red, and it's been closing near the lows over here. This could easily break down unless you want to treat this as a range. So this whole area over here as a range low, and then you kind of bid with your stop losses below those wicks, anything under those wicks, and it's going much lower. Curve looks like the rest. Hold the lower band and it can bounce from that region. DYDX has had an aggressive run up as well. I wouldn't want to see it come to the lower band. This one needs to hold above the mid band over here, or even start closing outside and above that region. GMX can come as low as, because it's been an aggressive move, I'd say the middle of the band, which is this region over here at 67. Theoretically, it can come down here, but I wouldn't want to see closes here. If it wicks and aggressively comes back up, that would look okay. GNS, massive wick over here because of the Binance listing. Basically, last line in the sand is the middle band over there. Casper, massive move over here. Huge. Forget it. Don't chase the pump. Looks rare, only just starting to turn red now. Distributing break of structure. You've taken out the lows. If you're holding this as a long, any bounce that comes up into the middle band over here, I would consider getting out of my positions because this one's probably going much lower. ENS recently turning green. You don't want to see any closes below the middle band over there. Lido's been pumping lately. Forget it. I wouldn't chase it. If you are in this and you're trend trading it, you don't want to see any closes back below the top of the band. So when things are very bullish and you're using this indicator, you kind of use the top of the band as a support level. So you can see over there, support. Once you come underneath that, then you're going to have a break of structure. And that means that you're looking for distribution following that. Okay, guys, you know how to use the Gaussian channel. I think I've shown you enough. I see all of you in the comments over there. So EGL, I don't know, guys, go check on your own charts of their Anchor's been pumping. I can see in the comments over there. So go have a look. You know how to use it. You're looking for it to be green. You're looking for it to hold above those bands, and there should be no break of structure. Let's go back onto Bitcoin. I'm sticking with my guns over here. Nothing has changed. You guys know exactly what I've done. Fully transparent. I bid this region over here at 21,500 was my exact entry. I took some profits at the range high. I re-added those profits into this region over here to bring my average price down. Because remember, if you buy low and you sell high and then you re-add low, your average price actually goes down, which means that I'm now in a fully risk-free trade. So if prices come back below these regions, I'll be stopped out of my position with profit, not even at break even. First warning sign would be closes below this trend line over here. So the diagonal trend line, this one. Any closes that happen below that, that is your first warning sign. Then your next warning sign is losing the 200 exponential moving average, which is the blue one. Second warning sign. So now you got two. You break that, you lose that one. The third one is obviously once you come below this region over here, below the wick, a lot of stop losses are going to get triggered. Short-term traders that went long over here would have their invalidation underneath that wick. Remember the 16K buys, all of their stop losses are going to be staggered between, I would say, 21,000 and up to $22,450-ish. So within this area over here. What does that mean? That means that's free liquidity. So if there is market makers that want to push price higher, they have the opportunity to send price lower first to capture those stop losses. And if you see it as a wick, so it's only a wick that comes down into this area and price quickly reclaims. What would that look like? Like this. So you see price come down like that. But that's the important part. Very, very quick reclaim above this level over here back into the range. That would mean that obviously they've trapped the longs. The longs that got stopped out of their position will probably have to buy back higher, and then prices can continue on up. But if you see a slow grind, which I covered yesterday, into this region, it's going to look like distribution. Those stops are going to get hit, and then you have the potential of coming all the way back down to the range lows, which is around that 18K level. So I want to be clear on the ranges because I've spoken a lot about the ranges on today's show. Here's your range levels, right? You got your mid-range, 21,500. Then you got your range low coming in at 18,000, let's just call it 18,000 flat. Those are your levels. So you either bounce from the mid-range, lose that level, and then you're coming down to the range low. And to identify when this is happening live, you're going to need to zoom in on a lower time frame. So if price does start to come down like this, a wick is not good enough, right? You need to see price holding underneath that level. That means cut your long positions because you're going down to this region. Then you're going to be range bound, right? So at the moment the price often does this, guys. So you have your main ranges, right? Price has been operating within this range, within the top half of the range. If it fails to hold this level of support, then expect that probably for the next couple of weeks, this is going to be your new range. So we just operate in range 1 or we're operating in range 2. It's really as simple as that. That's the way that I treat the market. That's the way that I'm looking at price action, at least in the shorter term. So here it is again, just a cleaner chart supporting trend line. We are starting to hold below the 0.75 level of that range, which is already your first warning sign. So let's zoom in. Go on the hourly or 2-hour chart. That's fine. So if you have a look over here, right, sell off into this trend line over here, fails to close above. Look, rejection. Big push up, immediately the next 2-hour candle, straight rejection down. Again, bounces off the trend line over here, tries to get back above, fails once again. Once you start to break this trend line, especially with a closing candle, if you're even closing a 1-hour candle below this trend line, because these are all wicks showing that there is demand. Once you start closing 1-hour candles below here, then the probability becomes increasingly higher that you're going to revisit all the way down to that mid-range, which is 21.5. Okay, so keep an eye out on that. Another thing I'm looking at closely is the funding rates. The best indicator that I found, I don't know if it's like very, very accurate, but it's been relatively useful, is the BitMEX Funding and Premium Index by 𝗕𝗬𝗕𝗬𝗍. That's the indicator if you type it in under indicators. So I told you yesterday what you're looking for is extremely negative funding rates. You don't have extremely negative funding rates yet. You're looking for backwardation and extremely negative funding rates. This was an example of extremely negative funding rates, right? What happened over here with FTX, probably won't see that again unless Binance goes down. We get another major black swan. The other one was over here when where everyone thought that was going to be the May-June low. And then the next one was over here for March, for COVID. So you can see the probability of getting one like this again is unlikely. But you kind of want to look at the history of this on the daily chart. The point is that funding rates have been extremely negative for long periods of time. When there's a drop in volatility, and you see this for prolonged periods, what I'm saying is very important, guys. This is literally how you buy the bottom of the market. So pay attention. When you see the funding rates extremely negative for long periods of time, when you see the market in backwardation, which means that Bitcoin's spot price, the current price, is more than what the futures price is, meaning people are bleak on the future. They're looking for lower prices in the future. So you see those two things in conjunction. And then you see a massive drop in open interest. Pay attention, because that is the making of a market bottom. That's when you're looking to position your longs. So I'll just skip straight to this chart over here. Here you can look at the open interest, which is what I just mentioned, right? We know what happened already in January where the market took off. So let's go to January. There's the open interest. Open interest started to fall off a cliff. Everybody got bored. That's December, up, down within this region. Where is the open interest now? It's in a similar place. The open interest has been mostly trending down, meaning that players don't really want to play this market. The market's boring. Like, let's see, how many of you are live? 1,484, not too bad. How many likes do I have, by the way? If there's 1,484 of you, I expect 1,484 likes. before the end of this video. But essentially, this is what you're looking at. The market is getting bored. We usually have peak live views, at least on my show, in the region of 3,000 to 3,500. 3,000, not 3,000 to 3,500 when the market is running, which means that the interest is low. The interest is definitely low within the market, and that's when you want to pay attention. When you become complacent is when you should actually be most focused. So don't become complacent. Watch if the market revisits the range low or the mid-range. That could really become a massive, massive opportunity for you to position yourself for long-term positions, right? Long-term longs that you can build on spot for the next run. So that's what I'm watching over there. And I asked this question yesterday, what comes next? Bitcoin to 20,000 or 25,000. Here you have an almost equal split. So you can see the market is very, very indecisive and undecided at the moment. And if you do look over here at the long to short ratio across all the multiple different exchanges over here, it's in agreement with my tweet over there. So the market sentiment is almost exactly the same. You have 44.87% when you consider this overall result, who are long versus 55.14%, which are short. So anyone's game at the moment. You can make the argument for both the long and the short. I think in the very short term, we're looking at a little bit further downside move, possibly even as low as 19,000. But I do believe that any price action that revisits those levels in the presence of backwardation, in the presence of a drop in open interest, and in the presence of extremely negative funding, meaning that most people are shorting the market, that creates an opportunity. That is an opportunity for potential longs as long as Bitcoin holds sideways. And I saw in the comments over here that some people are saying always bullish. I literally don't know how long you've been watching the show, but I've been bearish for over a year, since the very first show that I ever made, which was at $48,000 Bitcoin. I was bearish before that, but my first show was $48,000 Bitcoin, and I publicly sold all of that. So I can't be permanently bullish because I was bearish for an entire year. And now I'm starting to look for opportunities to build longs. I'm not saying that the low is in, but the monthly close is important. If the month can close above these key levels, let's quickly go into the monthly chart before we end off over here. Let's zoom in. So you can see this indecision candle at the moment. I've written critical. This is no doubt on a monthly chart a resistance level. Big, big resistance level. If the monthly chart can close green above this, if you do see a big push up, then you can expect that there's probably going to be continuation into February. If it closes like this as an indecision candle, your best case scenario as a bull is you're looking for just sideways price action, maybe a little bit down towards that 20K region dips, and then that can be bought up. But will these lows be revisited? I don't know yet. Nobody knows. I don't know yet. I can't answer that question. It is very, very possible, but we'll have to take each week as it comes. So that's what I'm watching over there, guys. Please give the video a like, hit the bell notification, and subscribe to the channel. And then in more important news, very, very, very important. This is critical. So listen up. I know a lot of you have already joined with Bybit and BitGet. Today is the last day. Here we have it. Beautiful, stunning, exquisite, high-class Rolexes over here, which look like they're fake because of the green screen. There we go. Now you can see them nicely. These will be given away today on Run Show. Today's the last day, right, James? Yeah. Is he giving both away on today's show? He's giving both away. Okay, he's giving both away. That's the other thing. He's doing it as well in the Discord. He's choosing people from the Discord. So if you are not in the Discord and you want to get into the Discord, use one of the sign-up links over here for Bybit or BitGet in the description below. This will get you access into the Discord. Here, we hold your hand. So if you're looking for hand holding, we give it to you. There's the trade setups from the weekend. Price action basically followed exactly like this. You had the long, you had the short, and now we're kind of looking for the next long to play out where price comes into this level, and then there's one more long. By the way, had you followed these trades, you would have already doubled your account. And I kid you not, you would have already doubled your account if you followed the trades that have been dropped in this group over here. And that is in my Discord community group. So make sure that you join in that group and give me your comments over here of what you want charted for tomorrow. So drop the comments in the comment section, give the video a like, hit the bell notification, and subscribe. And I think that brings us to the end. I shall see you all on tomorrow's video. Have an absolutely stellar day. Thank you all for watching. I appreciate all of you, and cheers for now.